This is Scott Becker with the Becker Private Equity Business Podcast. Thank you for listening. Here are 17 stories that we're following today. First, Tesla has dropped 16% to start the year, but note the headline right forward that we're going to share with you in a second. Second, here's a headline on Ford that it comes out of Benzinga. Ford has spent $16 billion on electric vehicles, but is imploding as Tesla sees continued momentum and their EV efforts implode. The great question is, what does it mean for the legacy automakers that are so far behind the Teslas, the BYDs of the world? We'll see how that plays out over time. For a great story about that in Benzinga. Third, markets rose to record highs again yesterday. They're slightly up to the Dow's a little bit down, the Nasdaq is a little bit up. We'll see how that continues. Fourth, we already talked about this. Futures pretty flat today. The Nasdaq has to be up a little bit. The Dow down just a little bit, but it's early in the day. Fifth, ADM dropped 25% yesterday. Their CFO resigned, some other big internal problems. Sixth, Bitcoin, which I can't quite get a handle on, has dropped back below 40,000 after climbing to 48,000. Seventh, the Telegraph, the great London newspaper, reports that nearly 50,000 companies are on the edge of failures that grapple with the double whammy of steeper interest rates and consumer gloom. And we'll see how that goes, but it does paint a lot of a picture of the companies that need to refinance into higher interest rates are really concerned. And obviously in the real estate business, there's great concern about that as well. Eighth, Gucci owner spends almost $160 million to buy a location in Manhattan. So notwithstanding all the gloom and doom about real estate, Gucci's still spending very big to get one of the great locations on one of the world's most iconic avenues. Ninth, after publishing that I've mastered golf, it turns out that I was ahead of my time. That was not quite true. It seems to be going quickly in the wrong direction. So just like the old headline, this will only resonate to people of my generation. Dewey beats Truman, one of the great premature headlines of all time. My podcast, that I have mastered golf, seems that it may be premature as well. 10th, China and its stock market are facing serious problems. The value of the Chinese stock market has never been as far behind in the U.S. stock market ever. Losses continue to pile up in China. China's also discussing a partial bailout of its stock market. Real problems there. Even though China's our biggest economic rival, you got to be careful what you ask for, because if they end up in real trouble, I assume that will be very contagious to us as well. 11th, Bill Gross, the one-time bond king. He was famous as the bond king, then did some silly things that got sort of dethroned. Says the Fed should start raising rates soon. We'll talk in a second about why that's so important, why people follow that so closely. 12th, NVIDIA was up almost 200% last year. AMD was up nearly 130%. 13th, the Becker Private Equity Business Podcast ranks number one in the rankings this week on the Apple Businesses Podcast. We're always thankful to our listeners and Chanel Bunger and Jeremy Core for that. 14th, the Becker's Healthcare Podcast is also ranked very highly. 15th, April 8th to 11th, we've got the Becker's Healthcare Annual Meeting. We'll have President Bush speaking, Michael Strahan speaking, Bill Belichick speaking, Martha Stewart speaking, not all at once, because that would be certainly an interesting panel, but it should be a great meeting, and then several hundred health system executives speaking as well. Bloomberg reports Goldman talking about the concept that the Fed should lower rates 4 times this year. We'll talk in a second why people view these rate reductions as so important. 17th, there are 2 things that are driving so much concern about the rates. First is, as rates come down, people think the stock market will continue to move in the right direction. Lower rates make the stock market more attractive. Higher rates hurt the attractiveness of the stock market, because people could make the same amount of money or make good money to just putting money in bonds and savings. And so it makes the equity markets a little bit less attractive. But also, there are a ton of borrowers out there, real estate and non-commercial, both businesses and real estate and consumers, that have so much debt outstanding that repricing that debt at higher interest rates is really a disaster for them. So people are looking for some of the relief of lower interest rates. Again, these are 17 of the stories we're following today at Becker's Private Equity and Business. Thank you for listening to the Becker Private Equity and Business Podcast. Thank you very, very much.